Welcome back to the channel. If you are new to this channel, please subscribe to the channel, please like this video, and then share the video with your friends and your loved ones who want to learn how to trade forex profitably. In our previous video, we looked at market structure, break of structure versus change of character, and in this video we are going to look at another SMC concept that most traders, even traders who are not SMC traders, use it to trade profitably, and that is demand and supply. Sometimes you hear it from people on Instagram, on TikTok, on Facebook, that I bought from a demand zone, I sold from this supply zone, and they have been using the term up and down, but you don't understand what they mean. Now, demand means that a large buying order in the market, and because of the orders, it moves price very quickly. Okay, you see the price moves very quickly or aggressively from that price to the upside. That's a demand zone or a demand level. And the supply level is a large selling move that occurs in the market as a result of what? Large sell orders. Okay, an area that you will see that price moves aggressively from that area to the downside. Okay, that's a supply zone because there are a lot of sell orders that are being packed in by SMC. So when SMC pumped in a lot of money to sell a particular product, the zone in which they are selling from becomes the supply zone, and in which they are buying from that will push the price up becomes the what? The demand zone. Let me show you the real chart examples, okay, so that you get the basics and the understanding of what I'm trying to say. And the general rule about marking supply and demand zone is what? You mark the entire accumulation. Okay, you mark the entire accumulation, and you look for the last bullish candle before the bearish move. So if you are looking for a demand zone, you mark out the last bearish candle before the massive or the aggressive buy. And if you are looking for a supply zone or a supply level, you mark the last bullish candle before the massive sell. So you mark the last opposite candle. Okay, you mark the last opposite candle. Some also use the wicks of the candle itself. So the big candle or the impulsive candle that is formed, they mark out the wicks of the impulsive candles, and that's in the tricky situations. Others too also mark the last candle before the what? The imbalance candle or the gap candle, or the fair value gaps candle. Okay, if you don't understand fair value gaps, check the next video. That will be our fair value gap video, and you get the understanding of it, okay, much better. But I'll explain it a bit in this video. Okay, so let me take you to a real chart and explain these concepts that I'm trying to explain here. So like I was saying, you see something like this, you see an accumulation, okay, or a consolidation, and all of a sudden price spikes to the upside. You see a very buy aggressive momentum stepping into the market. And what do? Once the aggressive buy moves this way, there will be unfilled orders, okay, because of how sharp price moved. So what smart money does is they will bring price down to this zone, to this accumulation zone, which is the demand zone, and price will come back to retest the zone before it will continue to the upside. So if you take it in a sell scenario, it's also like that. Price will accumulate like this, it will accumulate, and an aggressive sell candle will pop in. Mostly it's in the session opens, let's say London open or New York open. That's when these aggressive sells from the demand and the supply zones happens. Then something like this will happen. So as an SMC trader, you wait for price to come back into the zone, then you take your sell from there, and then it goes from there. Okay, so what do? You mark out the last, so in the demand zone you mark out the last bearish candle, okay, which is the last red candle, the last red candle before this green candle that will push the price up. That's the candle you are marking, and you wait for price to come into it, and then you buy. And in the supply zone or a sell scenario, you will mark out the last bullish candle that formed before the big candle came and then closed all of them to the downside. and you wait for price to come in there, and then you take your entry. Let me show you real chart examples. Looking at this chart, this is Euro USD chart, and you can see that market was accumulating from here, from this candle to this candle. Market was accumulating. You see, we were ranging. Market was ranging. And what do you have here? You can see that after this red candle, a very aggressive bearish candle came in, and it has closed how many candles? 1, 2, 3, 4, 5. It has closed all of them. A very massive candle has formed, which has closed below all these candles. Okay, so to mark the supply zone here, you mark out the last candle, the last opposite candle before the move, which is what? This green candle here. That's the last opposite candle before the move. You mark out the last green candle, and you put your pending order, or you wait for price to come in there, and then you take your sell. And then what happens? The market moves to the downside. Okay, so what you need, you mark the last opposite candle. So this is a supply zone. Let me show you another chart example. Okay, look at something like this here. You can see that from here price was accumulating. Then this bearish candle came in, very bullish. Very bearish, a very big momentum candle. It has engulfed all the accumulation candles. So what do you need to do? You mark out the last opposite candle, which is this green candle, and you wait for price to come in there. And what happened? Price came in and immediately rejected from there, and it went to the what? To the downside. Okay, and it went to the downside. Let me show you another chart example. Look at this example here. From here, price was accumulating. There is no big momentum moving, big momentum candles. Okay, until this big bullish candle came in, which has engulfed 1, 2, 3, 4, 5, and it has closed above here. So what do you need to do? You mark out the last red candle that formed, and you wait for price to come in there. And what happened? Price came in, retested once, twice, thrice, and the fourth time it went up, and that was the end of the story. And price keep on buying till this point. Okay, so this is a demand zone, and as you can see how it is being identified. Let me see if I can show you more of it. In fact, the market moves from demand zone to supply zone, demand zone to supply zone, demand zone to supply zone, because when there are a lot of buying orders, that it will move price to the upside, and when there are a lot of selling orders, that it will move price to the downside. Okay, let me see if I'll get you more examples and you get the understanding of it. Let me show you a bearish scenario. Okay, look at something like this here. You can see that from here price was accumulating to the upside. From here price was accumulating. You see, price was accumulating, it was resting, and all of a sudden we have this bearish engulfing candle, a very big red candle that has engulfed almost all of them. So what do you need to do? You just look out for the last green candle or the last bullish candle. Don't get confused. Okay, I use the blue for green and then the red for red. Okay, so in case you see another person's chart and it is green and red, that's how it's supposed to be, but I just decided to use the blue. Okay, so you mark out the last green candle, which in this case blue here, and you wait for price to come in and mitigate your order. And what happens? We sold from there. So that's how supply and demand works, and if you understand them very well, your trading will change for good. This is where I'll draw the curtains, and if you have any questions, please don't hesitate to ask them in the comment section, and I'll be right there to answer them, or I'll make another video to explain them much better. Please subscribe to the channel, and I'll see you in the next one.